Hello and welcome back to the monthly market outlook. I know it's been a while. I believe our last monthly market outlook here with Amber Hestla and Mike Carr was back in July. We've been trying out some new video features since then, but we want to get back to it because the market's going crazy. We had a crazy bear market rally. Jerome Powell got out there and basically tanked stocks for a week. And this week we're starting to see a little bit more of an upswing. So we're not getting to you at the very beginning of the month, but there's still a lot going on in the month of September you need to know about as a trader. And I have two of the best experts in the world, the two truest options masters in the world, who are going to help you understand the markets, understand what's coming, and most importantly, show you how to trade it. So we're doing something a little different with monthly market outlook this time around. Mike Carr, macro master that he is going to cover the major events and the major economic data that is coming out right now and is set to come out through the rest of the month. Then, based on that data, Amber Hestla is going to take a look at the technicals, show you what the charts are doing, and at the very end, you will get a trade recommendation from her on how to best take advantage of the market swings over the month of September. If you like this content, make sure you like, subscribe, hit the notification bell. That's the best way for us to grow our channel and make sure new traders see great content like this. So without further ado, we will take it over to Mike Carr. Mike Carr, what are you seeing out there?
Thank you, Mike. I am going to share my screen here and bring up a chart. And what I want to show is where we are in the market right now. So we've had this rally and everybody gets excited every rally we have. That's just the way bear markets are, though. I have a trend line on the chart here. This is a chart of the S&P 500 index. And you see here the trend line. We're still in a bear market. We're still in a downtrend. But what's interesting on this chart here is the dashed line. This is the average volume weighted price since April 2020. So I've selected April 2020 as the starting date because that's when stimulus checks started hitting into the stock market. If you recall, government sent money to everybody back in 2020, and a lot of people took those stimulus checks and invested. That's what drove this rapid gain. So this chart, this indicator is showing us the average price traders have paid for stocks since that time. And then it's aggregated up into the S&P 500 index. And as we see, we're right at that line. What that means is the average investor shows a break even. When we fall below that line, we see a quick down move. That happened once before. I think it's likely to happen again. We should expect a break of the average volume weighted price to push prices much, much lower. So this is a support level determined by investor activity. I want to look at one more chart. This is the greed gauge, again, aggregated up. We see that about 28% of the stocks in the S&P 500 are showing buy signals. Most are utilities. We're in a defensive market, and this reading at a bear market low always falls below 10. So we are far from the bottom here and lots of additional downside to consider.
Awesome. Thank you for that, Mike. Just want to point out something interesting about that chart, first of all, is that breadth was declining for the entirety of 2021 while stocks continued to rise. I'm curious what you think of that before we move on.
Well, breadth does turn down long before price. The divergence will form, but in 1998, the divergence started forming. And by the middle of 1999, the divergence was screaming sell. Market went up for another year. Yeah. So the divergence can form 2 to 4 years early on occasion. And that's not really a timing tool as much as a bottoming tool.
Okay. Very good to know. And I just wanted to point out a couple of the economic events this month. So we have the CPI. I believe that's coming out on next Wednesday. I forget exactly when, but that's definitely going to be a big catalyst for the market.
That is, it should be Wednesday, the 8th trading day of the month. And we should see a big move associated with that. Of course, we're all hoping for lower inflation, but hope is not a strategy. So gas prices are coming down. That should help. Home prices enter the index, enter the CPI with a 12 to 18 month lag. So that's still pushing prices up through the end of the year. And we've also seen some increases. Maybe Amber's in a better position to comment. Back to school supplies. Looks like retailers are charging a little bit more. And in the grocery store, we're still seeing not so much inflation at this point as shrinkflation. There's 2 less cookies in the Keebler packs, if anyone's concerned about that. So that's an issue. Inflation is still there.
I see. Definitely something I've noticed myself. We also have the Fed making an interest rate decision pretty soon here, another catalyst to watch out for. But I will move it on to Amber Hestla, who's going to show us her volatility indicator and a trade that you can make on it today.
Thanks, Mike. I'm also going to share my screen here with you. So just drilling down into the market, I'm pessimistic. So that's just a big word for bearish. I looked at major stock market averages in the US and all are bearish based on this indicator. That's an indicator I designed to measure the fear in a market. It's like VIX, but can be applied to any stock or any market, whereas VIX only applies to the S&P 500. The thin blue line you see is a moving average of the indicator, and the indicator provides us with a timing signal. And when that indicator moves above the moving average, fear is rising and prices are likely to fall. So after I saw all stock market indexes were bearish, I looked at sectors, all bearish. So I looked around the world where major country ETFs are almost all bearish. The most interesting trade I saw is in FXI, which you can see on the chart. An ETF, it's an ETF that tracks the stock market in China. So my indicator just turned bearish there this week. That makes it an ideal time to buy a put on FXI. The September $30 put is trading near $1 and has significant potential for gains. I don't really have anything else giving a timely signal like this, but I really like this trade for right now. I think stocks in the US and around the world are headed lower, so there's no need to look for buys right now.
Awesome. Thanks very much, Amber. Bearish on China. I remember when the China trade was such a bright and glowing hope in every trader's eye. Not so much anymore. All right, I think that's going to wrap it up for Monthly Market Outlook. Thank you very much, Mike and Amber, for your insights. Always valuable. Once again, if you got a kick out of this video, be sure to like, subscribe, throw us out a comment, hit the notification bell, and probably place that FXI trade. We're going to be checking in on it next month and see how it performs. I'm pretty optimistic on it, knowing the skills of our true options masters. Anything before we break? Mike, Amber? Yeah.
I think we covered quite a bit.
Yeah, I'm pretty happy with it. I'm sure everyone else is happy with it too. We will be back to you next month. Also look forward to our Options Arena video series and some new stuff coming from Mike and Amber as soon as next Friday. Thank you again. Have a great one, and we'll see you next time.